Today is Monday, July 3rd, 2023. Welcome to the Safe Wheel live stream where I share my P&L on 3 accounts. And I also teach my proprietary Safe Wheel trade for free. Please type in the chat that you can hear me okay. I want to make sure my audio is working. I'm going to assume that it is working, and make sure to post any questions that you might have about the Safe Wheel or just options in general. And we'll go ahead. You can hear me fine. Thank you, some guy that you can hear me. Good. All right. Thank you, guys. Thanks for letting me know that you can hear me. Let's talk about the earnings edge. So, what happened last week? Last week with the earnings edge, I did not trade anything. Nothing fit through all the filters. And so there was no trade. Sometimes that's going to happen, especially when we're not in earnings season or we're in the tail end where earnings season is coming up. A lot of times there's not a lot of options out there for stocks coming into earnings, and therefore uh, very few will fit through the filters. In fact, none fit through the filters last week. Let's get to the spreadsheet here. You can see my balance, $9,253, my net liquidation. And let's see here, $9,253. Have that here. Let's take a look at what the SPY is trading at. 443.46, 443.46. So we can see how the earnings edge has done since inception, which was January 1st of 2022. We say that it did 64% in January, outperforming there, where the S&P was down 19.5. And then so far, year to date, looks like the S&P is outperforming a little bit in terms of return, but overall, 85% return versus a minus 6.63% return overall. So vastly outperforming since I started sharing it and trading it live in January of 2023. Okay, that's the earnings edge. Let's talk about the Premier Level 5. How's that doing? You can see we trade options on the ES. We also hold some bonds in here. And you can see my account value, 34,747 or 672. Let's see what 34,672. 34,672. Okay. So the Premier Level 5, I started this on April 8th because I really built this program in early 2022 is when I got the concept together, and then it took me a while to backtest it. So I didn't start this right at January of 2022. But I started on April 8th, and you can see that in 2022, it outperformed the S&P 12% versus minus 6 from that time point of April 8th. 2023, up 3%, and the S&P is up 16%. Well, the S&P is doing quite well this year. So, but overall, since inception, I'm up 15.5, and the S&P is up about 8.5. So still outperforming. And you can see the drawdowns here. This thing has about 1/4 the amount of drawdowns. So risk-adjusted returns vastly outperforming when it comes to that. And you can see that my record is 18, 5, and 6. So 18 wins, 5 losses, 6 break-evens. I got 4 open trades at the moment. Let me go back to the earnings edge. I forgot to go over the win rate. 11 wins, 9 losses, 3 break-evens, average 973 on the wins and 499 on the losses. So 50-50 win rates win higher than the losses by almost double. But the Premier Level 5, so you see it here. And you see my account balance too. Here's my P&L right here. Okay, let's get into the Safe Wheel. Now, of course, the Earnings Edge, I put out a course that's available. There's a link in the description, or if you want to go to the alerts. And then on the Premier Level 5, I also have an alerts. And the Premier Level 5, the mastermind, that's pretty much closed right now. It's going to start this week, where I'm going to teach people how to trade the Premier Level 5 on their own. that mastermind starts. It's a 3-month mastermind where I come in and actually teach people live on weekly Zoom meetings, and that's coming up starting on Thursday. But that mastermind is closed out. You can't get into it. Okay, this is the safe wheel. So we're looking at DraftKings, right? And you can see that I don't have any positions except for my put hedge. So based on that, I either got called out of my long 100 shares, or I sold a put last week and I did not get assigned. I think I sold a put last week and did not get assigned. And now I'm sitting here with this put hedge. So the first question is this put hedge good enough to keep, or do I need to get rid of it, or what's going on with it? So the first question I ask is this 100 days or under? The answer is no. It still has some good time left because I don't want it to go below 100 days because then my theta gets too high and it depreciates too fast. But it's good, 137 days. And then the next question is this strike price within 70% of the price of the stock? So is 20 within 26.22? So I'll do a little bit of math here. 20 divided by 26.22 is 76%. Okay, so it's still within 70%. So it's still strong enough to protect the the wheel, because I'm going to run more of a traditional wheel on top of this. So now that I know my put hedge is good, I'm going to go ahead and do the wheel. I got make sure I have DraftKings in there and that I'm in the right account. Okay. All right. We're looking at the expiration cycle that comes up in 4 days, the one that ends at the end of this week. And I want to sell a put out of the money for over $26 or 26 cents, right? So if I'm in my puts and I'm out of the money, which would be 26 or 25.50, I'm going to go with the 26 here because it has enough premium. It's over 26 cents and it's out of the money. It's not out of the money by a lot. It's out of the money by about 30 cents, but it's still out of the money. So I'm going to sell this one. Now, as far as sizing, I have between $5,000 and $10,000. Therefore, I'm going to do 3 put hedges and one contract with the wheel. So let's see if I can get maybe 35 cents. And the answer is no. So I'm going to go ahead and... So I don't know if there's anyone else out there that's actually trading an account live right in front of you. Probably not. Let's see here. Oh, this sucker moved, didn't it? It's going down to 31 cents. Let's see, 32. Yeah, I don't think there's anyone else that actually trades the account. That every trade they make is live within the account. I don't see that happening anywhere else. I mean, and showing their net liquidation. I see some people that show their net liquidation or they show their trades. Man, this thing is just falling like a rock, isn't it? But I don't see anyone that actually makes all their trades right in front of you. So I do make trades on Fridays on Twitter, just because that long call, tell you what I do with that. This thing's gone down like, what, 4 or 5 cents just in the last 20 seconds. Sometimes I get a little bit stubborn, but I'm going to have to take 29, it looks like, before it goes down even more. Okay, now it's not even giving me 29. Well, yeah, you can see that that the stock moved up significantly. But yeah. Yep, I'm still going to get over 26 cents, so I'm going to take it. 28. Okay, so I got $28 there. Now I'm going to protect this hedge. So I'm going to hedge the hedge, right? And I'm going to go into the calls. I'm going to buy something around $5. Here's the 2850. It looks like I can get it for $5. I'm going to get one of those. Okay, so there I have my wheel on. I've collected about 20, $25. And if I don't get called, if I don't get assigned, be able to keep that premium. And that'll be more premium than what the hedge is depreciating by. And really the money is made with this system when I do get assigned and I own the 100 shares. And then when I sell my covered call and I sell it out of the money, and so I own 100 shares and then I get assigned at a higher price, that's really where the money's made with this system. I mean, I'll make a little bit here and there while I'm running this wheel, but when I get assigned, that's really when the money gets made. Okay, so let me check my notes here and make sure I got everything. So you can also pick up this wheel, the flow chart, and the filters that I use. There's a link in the description for that. If you're interested in getting more of a fast track rather than following every move that I make and then learning that way, you can learn the quick way by hitting that link in the description. Also, do me a favor real quick and hit that like button. That would help the channel out. It would help other people get wind about what's going on here. Especially a lot of people that are trading the wheel, the traditional wheel, and they're getting hurt by the wheel. This would really be helpful for them, and the way to reach them is to hit that like button. All right. Let's get into any questions that there might be. Also, as I mentioned this, don't forget to follow me on Twitter at Carl Dom. All right. These guys are telling me my audio is good. Kevin, good morning for over there in Florida. Okay. Let's see here. Less is more. Today's option prices are not wide, and the 1% premiums are at the money. It's recommended to take strikes that are at least one strike away, or can you take at the money? When I'm doing a covered call, I'll go at the money if I need to. Not at the money, but at the assigned priced money. But when I'm doing a put, it needs to be out of the money. And typically, I think that the volatility is pretty low. Or let's see, I bet you if I look at a chart here, you can probably see that the vol probably dropped on this. Yeah, see how low the volatility is down here? So that's why the premiums are lower than they have been in the past. You can see it here too. See, we're in the 40s, 45, 46, 46, 47. These are a little higher. These volatilities are up in the 60s up here. So you get better premium, but you can see the volatility has a direct effect on the price of the options. And I think the volatility has dropped recently, not just in DK and G, but across the whole, all across the whole market, SPY. And because when the vol stops, I mean, what is the VIX trading at? The VIX is trading at 13, under 14. So when the vol's low like this, we're not getting the premium at that 1%. But I would not go, when I sell a put, I would not go at the money. I would go out of the money only. Because the fact is, if you're having to go at the money, you're not trading the right stock. Your filter didn't give you the right stock. Well, I like doing my run to earnings strategy 2 weeks from earnings, wondering if it's better to do 1 week away like I do. Thinking about that, I think that going 1 week away is better because I think that the vol is more sensitive to the upcoming earnings event, obviously because it's only 1 week away versus being 2 weeks away. So I think that 1 week is better, but I'd have to back test it. I mean, you never know. 2 weeks might be better, but I haven't back tested it, so I couldn't tell you. But just with my just kind of thought process and intuitively, I believe 1 week is better. I'm going to run to earnings play with JPM right now. Maybe it would be a good pick for you this week. Yeah, I'll take a look after I do my live stream and a meeting. Then I'll come into the earnings edge and I'll look through all the filters and see what I can find. And JPM is usually a pretty good candidate because it's got really good liquidity. Shovel. Let's do this. Let's do it. The Cool Carl Show. Thanks, Shovel. All right. Will, some guy is also looking at JPM, trying to set it up in option strat. So option strat is a one way to look at the risk graph. If you don't have Thinkorswim, you can also look at it on Interactive Brokers. If you don't have Thinkorswim, but option strat's one way you can look at it. If you want to look at it on your phone, I don't think that as far as I know, there's no other way to look at risk graphs on your phone unless you use option strat. Okay, Will, it's only 24 watching, yeah, but when you have 24,000 watching, do you think when you sell an option live, the price might immediately drop as it did just as we all try to sell it? Mostly asking facetiously, yeah. It's probably when it seems like there was a lot of people there today. But I think it has more to do with the price of DKNG. The price was moving rather than the um, demand of that particular option, because I don't think the demand on that option is going to move very much, even with all that volume. If the price doesn't move, the price of the underlying doesn't move very much. So yeah, I might have lost a couple cents because everybody's trying to get in, but the way I went down like 5-6 cents right there, that was pretty high. But I think it had everything to do with the movement of the stock. Philip, there's a guy who's showing a lot. Easy investing income, showing a lot. I'm not sure what that means. Maybe he's showing his P&L. But okay, we'll see. Bernard, good morning. Good morning, Bernard. How you doing? Will says, what do you think the edge you are trying to mine with the zero DTE strategy is? Is the idea that vol is high when the market opens and then settles midday? I believe it's the same edge that I mine with the PL5 and the synthetic dragon, which is that premium is higher, implied volatility is higher than real volatility, and that's priced in even on the last day of expiration day. They're still overpriced. The options are still overpriced. Philip, can you make a general banter on Circle? Circle? You mean the platform that I'm moving from Discord to Circle? It's just the reason why I like Circle is because I can put my courses on there. And I also can have a forum that I can talk to people. And it's kind of a combination of 2 in 1. And also it's private. And I like the fact that I pay for it, so I have more control over it too. Thanks. Makes sense. 1 week away helps as time decay as well. Yes. Yes. That's what I was thinking. There's going to be less time decay with 1 week versus 2 weeks. But also, I think that binary event coming up is going to have more of an impact on 1 week versus 2 weeks. Yeah. Hi, Carl. Can you scale up the earnings edge strategy, say 25K, or does the strategy only work on small accounts? You can scale it up, but I would not scale it up until I was trading it for a long time, 3 months, at least 6 months. Get that under your belt. Don't just throw out there 25 grand. I mean, I'm trying to turn 5,000 into 25,000. Then I have 25,000 to do it with, right? That kind of thought process. Really got to start smaller when you start something new or something that you're not totally 100% familiar with. Philip, you were talking about Circle. Good. I hope I answered your question about that. And Will says, if you're going to go with 25 grand, you are living on the edge. Yeah, you're taking some risk. I mean, if you got $10 million, yeah, sure, use 25 grand. But, most people don't have $10 million. So 5,000 is a good starting point. That's what I recommend. Get a hang of it. Get used to what's going on before you start putting money out there. And again, there's some risk involved. There's going to be some drawdowns. So if you can tolerate heavy drawdowns, so far it's been doing quite well from that point of view. Will says, have a happy 4th. Thank you, Will. And I hope all of you guys have a happy 4th of July. So the market's going to close early today. Then we're going to go through tomorrow, Tuesday, where the market will be closed for the 4th of July. So everyone here in the United States is going to be celebrating the 4th of July. And I hope you guys all have a good 4th. And I don't see any more questions or anything else in the chat. So I'm going to go ahead and close with this. If the P&L is not real, what else are they trying to conceal? I'll be back next week.